The US Federal Reserve announces its first rate cut in more than 4 years. Asia markets rally, gaining momentum after the Fed's decision. And Google wins in court. A huge EU antitrust fine is overturned. Hello, I'm Adnan Nawaz. This is the latest business and finance news on TRT World. Hello again. The US Federal Reserve has announced its first interest rate cut since the early days of the COVID-19 pandemic. It's been prompted by a softening labour market and easing inflation. The move is the US Central Bank's most significant cut outside of emergency measures since the 2008 financial crisis. More reductions are anticipated by the end of the year. As Omer Bakalolu reports, the decision has ignited decisions about how aggressively the Fed should be proceeding with further cuts.
Begin dialing back the amount of policy restraint in place that begins to come into view. It will likely be appropriate to begin dialing back policy restraint at some point this year. Reducing policy restraint too late or too little could unduly weaken economic activity and employment. The economy is moving closer to the point at which it will be appropriate to reduce our policy rate. The time has come for policy to adjust.
After months of anticipation and carefully chosen words, the US Federal Reserve has finally made it official with a bumper 50 basis points cut. That's the first in more than 4 years, leaving the federal funds rate at a range of 4.75% to 5%. Previously, central banks around the world often followed the Fed's lead for policy changes, but this time the US arrived late to the rate-cutting party. The European Central Bank and the Bank of England had already announced similar cuts earlier this summer in response to a cooling economic outlook. The Fed had delivered 525 basis point hikes in 11 meetings since March 2022, as pandemic-era easy money policy pushed up inflation to levels unseen in 40 years. The benchmark interest rate was held at a 23-year high since July 2023, when policymakers completed the most aggressive tightening cycle in decades. But the patient approach is starting to show results. Inflation dropped to 2.5% in August, setting the stage for the long-anticipated adjustment.
Our patient approach over the past year has paid dividends. Inflation is now much closer to our objective, and we have gained greater confidence that inflation is moving sustainably toward 2%. As inflation has declined and the labor market has cooled, the upside risks to inflation have diminished and the downside risks to employment have increased. We now see the risks to achieving our employment and inflation goals as roughly in balance, and we are attentive to the risks to both sides of our dual mandate.
For Americans, this change will directly affect how much they pay on their mortgages, loans, and credit cards, but the impact extends well beyond the US. Around the world, countries with currencies tied to the US dollar will feel the effects too. The decision will likely shift their central bank's policies. Investors are also looking to this cut with hope, expecting it to stimulate the stock market. Historically, US stocks have averaged a nearly 5% return in the first year after a Fed rate cut, even during recessions. With the economy currently avoiding a downturn, some analysts believe that returns could exceed 16% this time around. So, as the Fed moves forward this policy shift, the question now turns to how much further they are willing to go and how this decision will impact the global economy in the months to come. Ömer Bakalolu, TRT World.
Let's try to get some answers. Let's speak to the independent market strategist, Mike Ingram, who's in London. Mike, thanks so much indeed for your time. First of all, agree, disagree, too much, too little, too late, too soon?
Well, I think the truth is that the Fed is once again behind the curve. They were behind the curve in raising rates in the face of fairly persistent COVID-inspired inflation, and they're behind the curve in cutting the rates. And the reason why we've had a 50 basis point cut now is because they should have cut in July. So they are playing catch up. I think what's interesting has been the market reaction, because even though Powell is obviously not going to admit that the Fed's behind the curve, what happened at the post-rate meeting in the press conference was he came over quite hawkish. So the initial positive market reaction soon turned to one of of disappointment because they're not convinced that the Fed is actually going to deliver the rate cuts that the US economy actually needs.
So does the Fed make these decisions mainly based on domestic issues, or it's international trade as well, considering how convertible and tradable the dollar is? What's he done here in terms of the domestic versus international issues?
Yeah, well, it's sometimes quite difficult to work out what the Fed's so-called reaction function is. I mean, in principle, they have, as Powell mentioned in that clip, a dual mandate. So they, need to ensure full employment in the US, and they also need to, keep an eye on inflation. And it's only relatively recent, actually, that the Fed actually had an explicit inflation target. So, as Powell mentioned, they're currently viewing those risks on both sides as being reasonably balanced. But there's a whole bunch of data that comes into this. Obviously, if they've got a strong dollar, that will tend to reduce exports. It will tend to reduce manufacturing. It will tend to reduce employment. So there are all kinds of ways that different data will feed into that into the Fed reaching its mandate. But I think the problem has become is that in reiterating that the Fed is data dependent, everybody jumps on every single data point, and of course there are usually several in any one given day, and they go, oh, this means the Fed is going to go higher, the Fed's going to go lower. So it keeps everybody on edge, and sometimes people can't see the bigger picture. I think the bigger picture is the US economy is slowing. The market is worried that actually it's going to have a significantly harder landing than the Fed seems to be thinking. And the Fed isn't going to cut rates by enough to avoid that hard landing. And I think that's probably explains some of the market reaction that we saw yesterday.
Yeah, we're going to look into Asia Pacific in just a few minutes, Mike. But with you looking at the EU as a single economic entity, the UK and the Bank of England about to make a decision, we believe, in the next few hours about its interest rates. Sterling also a very tradable currency. How does this Fed decision tie into those markets?
Well, we've obviously seen the pound go significantly stronger against the dollar. In fact, the dollar is yesterday touched a 1-year low against a basket of major currencies. The Bank of England is expected to be on hold today because they had, shall we say, some unhelpful inflation data yesterday. Services inflation seems to have edged up again slightly. On the European Central Bank that you mentioned, obviously, we did see a quarter-point cut last week, and we got some fuzzy forward guidance that the direction is going to remain down. But obviously, a Fed rate cut does give all sorts of countries a bit more wriggle room in terms of their own ability to cut rates, and that's truer in certain emerging markets which are vulnerable to capital flows, and countries such as China, which largely pegs its currency against the dollar and the euro.
Mike, thank you so much indeed. Really appreciate it. Mike Ingram in London. And to the Asia-Pacific markets, are experiencing a significant boost following the Fed Reserve's rate cut. Japan's Nikkei, 225 up, leading the charge. Investors across the region adjusting to the Fed's decision. Key markets like Hong Kong, China, as Mike mentioned, Australia also seeing gains. Optimistic economic data for those countries. Japan's Nikkei, 225, surging 2.53%. The Topix climbing 2.41%. Investors reacting, as we say, to that half a percentage point rate cut in the US. The Japanese yen weakening by 0.68%, so it's 143.24 against the US dollar. That will boost, of course, export-heavy industries. Hong Kong's Hang Seng Index gaining 1.81% after its monetary authority cut rates by 50 basis points. Mainland China, CSI 300 rising 0.8%, driven by a 4.3% surge in real estate stocks. And China's Vanke shares jumping 8.7%, fueling market optimism there. Australia's S&P 200 surging 0.68%. That's a record high again, despite a steady unemployment rate of 4.2%. That's surpassed estimates at 47,500. Strong job growth signaling resilience in the economy, contributing to market gains. Taiwan's weighted index rising 1.24%. The central bank preparing its rate decision and growth forecast updates. South Korea's Kospi inching up just 0.11%, a small cap. Kosdaq gaining 0.65%, regional markets mirroring the Fed rates cut. Okay, let's go to Dubai and speak to Farah Murad, a senior market analyst at Equity Group. Farah, thank you for your time. Mike was telling us that the British pound is stronger against the dollar than it has been for a long time. Is the dollar suffering all over Asia Pacific?
Definitely, and that's good news. I mean, everyone was waiting for that. We've heard a lot of voices from many central banks trying to push the federal bank to lower their interest rate. So this pivot point, this aggressive, if you would like to say aggressive pivot point, is something that would definitely help economies, especially heavily export-oriented economies, which we see in the Pacific and Asian countries.
Do you expect the surge to continue, or is it just a momentary reaction?
I mean, it would definitely continue. If we want to check what's happening in China, a lower dollar is definitely welcome. Japan as well. The inflation was spiking above the target, but inflation pressure was not coming from consumption. It was coming because of a stronger dollar. So this is a bit of a relief for Bank of Japan. They don't have to raise interest rate. And as I said, these economies can even become more competitive globally. Their the corporate earnings will benefit, their balance sheet will benefit. So this growth is probably maintained.
And considering how important real estate is to China, is this something that is almost possibly going to have an effect of literally saving some companies from going bust?
I mean, there's this dual effect, because if we've heard what Jerome Powell was saying, inflation pressure remains in shelter in the US. And there's this bit of dilemma that lower interest rate, meaning lower mortgage, it would support supply in the US, which would make real estate in the US more competitive. So we might see more interest in real estate in the USA. Definitely lower interest rate will help China, but I believe it's still an environment for potential higher reward, but higher risk as well. And the US, with lower mortgage rates, it might even become more competitive on a global scale.
Can you just explain how Australia has a record high market despite steady unemployment? How is it doing that?
I mean, employment is higher than their target, but we're seeing growth kind of supported well. Even now with a lower dollar, we're expecting their earning, corporate earnings to also be supported. And this is why I'm betting more on an Australian dollar, on a stronger Australian dollar, because what we're hearing, this is still, I think we can compare what's happening in Australia now, a couple of months ago, what's happening in the US. Inflation, fighting inflation remains top priority, especially with inflation being higher than even than the US, than Canada, than the Eurozone. So I believe growth is still sustainable, but at the same time, in this dual dilemma between unemployment and inflation, Australia is focused more and more on fighting inflation.
Farah Murad, thank you so much, Farah.
You're most welcome. Thank you for having me.
Let's have a look at some of the other main business stories from around the world. New Zealand's economy shrank by 0.2% in the second quarter of the year. That was following modest growth of 0.1% in the first quarter. 2 consecutive quarters of contraction represent a recession, so this was pretty close. Boeing plans to start furloughs for professional and white-collar staff as it seeks to conserve cash during a labour strike that has halted manufacturing in Seattle. Union talks have stalled. The furloughs will begin soon. They'll affect tens of thousands of employees. Selected staff will have to take 1 week of furlough every 4 weeks on a rolling basis. This reflects the significant challenges facing what is the world's biggest aircraft maker. Brazil's central bank has announced its first interest rate hike in 2 years, raising the benchmark lending rate to 10.75%. The increase is a 0.25 percentage point. It's responding to rising concerns about inflation. The Brazilian decision highlighting its contrasting monetary policy compared to what's happened in the US with the interest rate cut. China's Commerce Minister has been speaking at a China-Europe electric vehicle event in Brussels. He's addressed top executives talking about the EU's anti-subsidy case against Chinese EVs. The minister has emphasized Beijing will negotiate until the very last minute, and he says the investigation into Chinese EVs is undermining confidence among companies in his countries who want to invest in the EU. The outcome could significantly affect future collaboration in the sector. Still to come in the business news, EU has faced a setback. Google has won a $1.7 billion antitrust case. It had been fined that much. The fine has been annulled. We'll be back after a short break. Welcome back to the business news on TRT World. Google has won a major legal battle against the European Union. It's over an antitrust fine related to the companies companies that have to use brokers that provide search ads. The EU had accused Google of restricting companies to its own AdSense platform. The decision, of course, raises questions about the EU's power to regulate the market dominance of some huge tech giants. If the $1.7 billion fine had been upheld, it would have been one of the largest antitrust fines in history. The decision also freeing up lots of resources for Google to further invest in its ad products. For the European Commission, though, questions now about its ability to enforce its own antitrust laws. The Commission may consider appealing to the European Court of Justice. The ruling focuses on Google's control of the digital ad market, highlighting ongoing concerns over a possible monopoly and the annulment. Well, it could also embolden other tech giants to challenge similar regulations. Let's go to France and speak to Matthias Kettermann. He's Professor of Innovation Theory and Philosophy of Law at the University of Innsbruck. Professor, thank you. So this is about balancing market dominance with fair competition. The EU clearly has one idea. Google has won this one. So where does that leave that balance?
I don't think that a lot of things have changed. Google is still facing so many different challenges. This specific case concerned a small part of its service, the AdSense for search service. It concerned a phase that's now 20 years almost in the past. And yes, the European Commission lost this battle, but they can still appeal. And Google is definitely still in very hot water.
How much of a leader is the EU and the Commission, Margaret Vestager, the lady who is in charge of bringing these cases against these big companies? She wins some, she loses some. But how much of a leader is the EU in trying to find that balance that we're talking about?
Well, the European Union sees itself as a global norm setter, a rule maker for the big tech companies. They have to step into that role because neither the US nor China nor other big regions are setting firm rules and are consequently trying cases on competition grounds. They would have had that chance for the last decade. They haven't done so. So the European Commission has taken up that mantle and has started quite some time ago already to try to enforce competition rules. Some of the cases which they're pursuing make sense, some of them don't, and in this specific case, the Court of First Instance, as you've said, the ruling can be appealed, clearly told the Commission they haven't done a good enough job to show what exactly Google did wrong, which doesn't change the fact that Google is still in, as I've mentioned, hot water with regard to other cases. If you recall the 2.5 billion euro fine that was just levied against Google, specifically regarding shopping searches. We shouldn't forget about that.
If I was a company wanting to advertise on Google after the annulment of the $1.7 billion fine, would I then not be happy because of what Google is imposing on my company? Do I have any room for maneuver in terms of what Google demands of the use of AdSense?
Well, this concerned the law or the rules that Google imposed upon its competitors from 2006 to 2016. Everything has changed since then. But still, the ruling is important because any time that Google wins in front of a court, it emboldens the company. And that's why this is not not good news for Google's competitors. But they can look with hope to other judgments. I've mentioned the one regarding shopping searches, even though this concerned mainly consumers. But the one which I would be looking for is the big case regarding the abuse of power in the Android smartphone operating system.
So is that another case that we're talking about? Other companies could be emboldened to take some appeals against decisions that have gone against them. Are those coming, do you think?
Well, there are not that many. There are not that many cases, because we only have 4 or 5 really big companies. It's really more of a tennis match. You have like the 4 or 5 big players, and they meet from time to time. You have the same actors on the left and the right, on the Commission side and on the platform side. I wouldn't overestimate the importance of this judgment. I would rather look to the ones which we already have. and also specifically look at the 4.1 billion judgments regarding the operating system market power abuse. There's an appeal by Google against the ECJ judgment in the first instance, and we're going to see in a year or so how that works out.
Professor Matthias Ketchman, really fascinating, and we should say that other search platforms are available. I use Bing, for example. Take care, Professor.
Thank you so much.
Dozens of Samsung workers were planning to protest for better wages in southern India. Before they could begin, they were detained. Tensions are rising at their factory, and the future of the workers is uncertain. Celine Touter reports.
Workers at a Samsung factory in southern India hoped to march in protest. They were demanding better wages and recognition for their union. But before they could take to the streets, the police stepped in. Many workers were detained, halting their march before it could begin. It's a key part of Samsung's operations in India, contributing to nearly a third of the company's annual revenue of $12 billion. But now, angry workers have gone on strike and production has slowed.
150 people have arrested and they are detained. They are in a, how long they will be there in the detention, I don't know. But this is totally unfair.
India aims to become a global manufacturing hub by 2047. Prime Minister Narendra Modi wants to boost electronics production to $500 billion within 6 years. But Indian authorities say the unrest at a major plant like Samsung's could scare off foreign investors, threatening that plan.
If this continues, then we have to take further serious decisions in support of Samsung, like boycott of food and other things. And then, if it continues, it may lead to strike situation itself in other companies also.
Meanwhile, the police continue to hold workers in detention, and tensions remain high. More than 10 union groups plan to hold another protest in support of the workers. This could further escalate the conflict between Samsung and its employees.
We
will be happy if our demands are fulfilled, or else we'll continue our protest till our demands are fulfilled.
The outcome of this dispute could spread far beyond one factory. It's a test not only for the company, but for India's role as a manufacturing powerhouse. And for the workers, the fight for better wages continues, even as they remain behind bars. Celine Touter, TRT World.
Now to Kenya, where the power of virtual reality is helping the National Health Service trace a patient's journey from the start of symptoms through to treatment. VR has also been used to transform traditional business models, but some parts of the world are yet to experience it. The Africa VR Campus and Centre is looking to change that, particularly among children in rural communities. Grace Kuriakanja has the details.
Wear it on your head. This is how you say.
It is the first time they have ever seen a virtual reality headset. The campus aims to spread the tech word and explore the virtual world with these youngsters in Kiambu County, which borders Kenya's capital, Nairobi.
Africa VR Campus and Center is an organization that is dedicated to training VR, XR, AR, but not in shiny workshops and urban areas, but in the grassroots rural Africa, where we come with our gadgets, internet solutions, and we connect the community and train them what is VR, XR, AR. And the reason why we do so, of course, is for socioeconomic empowerment, because they too have stories to tell in the metaverse. They too have got their own local grassroots industries that can be, incorporated in the metaverse, and that brings economic empowerment and financial wellness to them.
Wayaki, a former teacher, says he was looking for a better way to engage his students, while at the same time increase their understanding of VR.
I'm so amazed by the many opportunities, and I look forward to the future, knowing that I will earn a living through it. And I've seen that I can also travel to another country when I'm still in Africa. That is so wonderful, and I'm so amazed. I can actually see the space and all the stars. Yeah, that's a very good thing.
After this 3-day training session, Wanjiko and her classmates can join the team if they want, like Wanjiro.
I feel special and I feel that I am an important girl. Also, it has also mentored me because I've learned a lot of things. I also earn a living there. When we go to an event, we get paid and it helps me to buy things that I don't have.
But the organization's initiative is not without its fair share of difficulties.
We are talking about infrastructure challenges, internet challenges, sometimes even the community looking at this new tech like, what is this? And so the absorption of it sometimes becomes a hindrance when you're trying to take it to the grassroots.
In a fast-changing world, it is important to adapt, like the students here who are thirsty for knowledge, hungry for education, and to explore the world through virtual reality. Grace Kriakanja, TRT World.
That's the latest business news on TRT World. The big story, of course, the interest rate cut announced by the chairman of the U.S. Federal Reserve, Jerome Powell. Asian markets already reacting positively to that and making gains. The Newsmakers is next on TRT World. Thanks for watching.